Ethereum, the future of decentralized applications. Ethereum is one of the most influential and widely adopted blockchain platforms in the world, often considered the second largest cryptocurrency after Bitcoin. While Bitcoin is primarily viewed as a digital store of value, Ethereum offers much more in terms of functionality and innovation, particularly in decentralized applications, known as dApps, smart contracts, and decentralized finance, also known as DeFi. History of Ethereum. Ethereum was proposed in late 2013 by Vitalik Buterin, a programmer and researcher involved in Bitcoin, who saw the potential for blockchain technology beyond digital currency. In 2014, Ethereum held a crowd sale to fund its development, and the platform officially went live on July 30, 2015. Ethereum introduced the concept of smart contracts, self-executing contracts with the terms of the agreement directly written into code. These contracts automate processes and eliminate the need for intermediaries, making Ethereum a groundbreaking platform for decentralized applications. Since its inception, Ethereum has undergone several key upgrades, most notably its ongoing transition to Ethereum 2.0, which aims to enhance scalability, security, and sustainability by moving from a proof-of-work to a proof-of-stake consensus mechanism. Pros of Ethereum. 1. Smart contracts and dApps. Ethereum enables the creation of decentralized applications that run without downtime, fraud, or interference from third parties. This opens up a world of possibilities in industries ranging from finance to supply chain management. 2. Large developer community. Ethereum has the largest ecosystem of developers building decentralized applications. The network effect of its community accelerates innovation and adoption. 3. Ethereum 2.0. The ongoing upgrade to Ethereum 2.0 addresses major issues like scalability and energy consumption, making it more efficient and capable of handling millions of transactions per second. 4. DeFi leader. Ethereum is the backbone of decentralized finance, hosting a majority of DeFi applications like decentralized exchanges, lending platforms, and stablecoins. It has democratized access to financial services. 5. Tokenization and NFTs. Ethereum supports the creation of tokens, including non-fungible tokens known as NFTs, which have seen explosive growth in recent years. Cons of Ethereum. 1. Scalability. Although Ethereum 2.0 aims to solve this issue, the current version struggles with slow transaction speeds and high gas fees during periods of heavy network activity. 2. Complexity. Ethereum's functionality is more complex compared to simpler blockchains like Bitcoin, making it harder for new users to understand and engage with. 3. Energy consumption. Like Bitcoin, Ethereum's proof-of-work mechanism requires significant computational power, making it energy-intensive. However, this will be addressed with Ethereum 2.0. Safety and security of Ethereum. Ethereum is built on blockchain technology, making it inherently secure and resistant to tampering or hacking. However, the safety of the platform also depends on how decentralized applications and smart contracts are coded. Poorly written contracts or buggy code can lead to vulnerabilities, which is why thorough testing and auditing are crucial. That said, Ethereum has one of the largest and most experienced developer communities, constantly improving the platform's security. Additionally, the move to proof-of-stake in Ethereum 2.0 should further enhance network security by lowering the risk of a 51% attack. Intricacies and specifics of Ethereum. Smart contracts. At the core of Ethereum's functionality is the smart contract, a piece of code that automatically executes when conditions are met. These contracts run on the Ethereum virtual machine, a decentralized computation engine. Gas fees. Users must pay gas to execute transactions or interact with smart contracts on Ethereum. Gas fees compensate miners or validators for their work in processing transactions. Proof of stake. With Ethereum 2.0, the platform is transitioning to proof of stake, where validators, instead of miners, confirm transactions. This will dramatically reduce energy consumption and increase transaction speed. Use cases of Ethereum. Ethereum has a wide range of applications across various industries. Decentralized finance. Ethereum supports decentralized financial services like lending, borrowing, and trading without traditional intermediaries like banks. NFTs. Non-fungible tokens, which represent ownership of unique digital assets like art or music, are primarily built on Ethereum. Supply chain. Ethereum's blockchain can track goods through the supply chain, ensuring transparency and authenticity. Gaming. Ethereum powers blockchain-based games where players can earn, trade, or sell in-game assets. Ethereum's performance over time. Ethereum's price and usage have seen incredible growth since its launch. It began trading at under $1 and has reached all-time highs above $4,000. Much of this rise is driven by the expansion of DeFi and NFTs, which rely heavily on the Ethereum blockchain. Ethereum's network activity, developer engagement, and innovations like Layer 2 solutions, for example Polygon, continue to boost its adoption. Ethereum in everyday applications. Ethereum is already being used in various real-world applications. Payments. Some businesses accept Ether as a form of payment. NFTs. Artists, creators, and collectors are actively using Ethereum for the creation and trade of NFTs. Financial inclusion. Ethereum powers decentralized applications that offer lending and banking services to people in countries with limited access to traditional banking. Blockchain IDs. Ethereum enables decentralized identity systems that can be used in voting, verification, and other applications. Ethereum's potential for future earnings. Ethereum has massive potential for future earnings, driven by the rise of decentralized finance, NFTs, and institutional interest. As the network becomes more scalable with Ethereum 2.0, its use cases will expand, likely driving further demand for Ethereum. The increasing integration of Ethereum into everyday applications, along with its deflationary mechanism, EIP 1559, enhances its long-term investment potential. How to invest in Ethereum. 1. You can purchase Ethereum through reputable cryptocurrency exchanges like Coinbase, Binance, or Kraken. Choose platforms with strong security measures and user-friendly interfaces. 2. Once you buy Ethereum, consider transferring it to a secure wallet, either a hardware wallet, same as cold storage, or a trusted software wallet. 3. With Ethereum 2.0, you can stake your Ethereum to earn passive rewards by validating transactions on the network. This is a great way to earn interest while holding Ethereum for the long term. 4. Dollar cost averaging. Similar to Bitcoin, you can use dollar cost averaging to invest in Ethereum by buying a small amount regularly, reducing the impact of market volatility. Ethereum's money-making potential. Ethereum has consistently been one of the best performing assets in the crypto space. Its diverse applications, growing ecosystem, and continuous innovations make it one of the most attractive investments for those seeking long-term gains in the blockchain space. As Ethereum 2.0 rolls out and the network scales, the potential for increased demand, use cases, and market value is significant. Ethereum's integration into major industries and decentralized finance further solidifies its role as one of the most profitable altcoins to invest in. Conclusion. Ethereum stands out as one of the best altcoins to invest in due to its versatility, strong development team, and widespread adoption. Its functionality extends beyond digital currency to power an entire decentralized ecosystem, offering numerous opportunities for both investors and developers. As Ethereum continues to evolve with Ethereum 2.0 and remains at the forefront of blockchain innovation, it is positioned as one of the most promising investments in the crypto space, with vast potential for future growth and earnings. Not financial advice, and please do your own research. Thanks for watching.